Well, there's been too much sky is falling talk along the way, so I think the markets are inured to this to a great degree. We're taking a wait and see with the latest political developments because those are a little bit more serious charges, but at this point, we don't think that the markets should be overly focused on that.
Jay?
Yeah, I think markets need to think about how does this really affect the bottom line for these companies. And right now, there's just so many degrees of separation between what we're seeing in the headlines and how that really affects earnings. So that
too hard to play this out.
Too hard to play this right now. Maybe years if this starts to really get serious, but not yet.
Okay, let's talk about the trade issues because those are front and center. It does seem like we've made some progress with both Mexico and then potentially Canada being able to come in with NAFTA. What would that mean for the markets? Who wants to take that jump off?
I'll jump in. This impacts a lot of the customers we bank across the industrial heartland. So there's certainly good news that we seem to be rolling out on NAFTA and making some progress there. We think the China issue is much more problematic and one that won't lend itself to easy resolution. So that's a mixed bag in terms of
what's a bigger issue for your clients, the China situation or NAFTA?
Mexico and Canada are so intertwined with the Midwestern economy that fundamentally that is more important, but it's also one where there was not as much doubt about the outcome. The China issue is to some degree one where I think the markets and our customer base may actually be too optimistic about a resolution. An easy resolution. So that's a little bit of a mixed bag. What we're watching most closely with regard to political impact and trade impact is business confidence, because that's been the big driver of CapEx. That's been the whole next leg up of economic growth, as well as the big driver of productivity, which we think is the key to extending our expansion.
And business confidence has been strong from every
It has stayed strong, right? The business community, by and large, is giving the president the benefit of the doubt that he is looking out for their best interests.
Jay, we've had very strong earnings that have come in, at least from most of the companies that we've been watching. That is hard to ignore. How long do you think will that be the issue that just drives where markets head?
Well, I think when you see earnings like we've seen this quarter, where it's 25% year-over-year growth, it's really hard for the market to discern a company that got 26% growth or 24% growth. It's just such a ridiculously high number. I think in Q1 2019, when we've seen a full year of Tax Cuts and Jobs Act, that's when earnings numbers are going to come down year over year. You're going to start to see them in kind of the high single digits. So a company that has 10% earnings versus 5% earnings can actually be a very different impact on that stock, and investors are going to be much more discerning.
What you're saying means that it's not a stock market or stock pickers market, which we hear from just about everybody who comes on. That sounds like the type of situation where, at least for some time,
but it will be in 6 months, perhaps.
Right.
Well, I come from the passive investing world, so we're seeing more people really kind of think about broad market strokes where they want to allocate. But if you start to see a situation where earnings start to come down and people are really discerning about, where are we going to see earnings, I think people will look more specifically at sectors and industries rather than just the S&P 500.